Welcome to the Wealth Without Wall Street podcast, your guide to understanding how to get out of the Wall Street rat race and start your own mailbox money lifestyle. Now, don't let these handsome Southern draws fool you. These financial minds are teaching our country to enhance savings, increase cash flow, and create passive income, all without the help of Wall Street. Are you ready to break through? Now here are your hosts, Russ Morgan and Joey Murray.
Welcome. This is the Wealth Without Wall Street podcast. Your host, Joey, the Italian Stallion Murray, joined as always by Russ, the idea guy, Morgan. And we have somebody else with us today, Russ.
Yeah. Ryan, would you like to say hello to everybody who's listening to us today?
Hello.
Ryan.
Hey, Ryan.
How old are you, Ryan?
7.
Ryan, the other night we got a chance to read a couple of you guys' favorite books by the Tuttle twins. We were reading 2 books. Do you remember the names of them?
The Golden Rule and The Monster from Jekyll Island.
The Creature from Jekyll Island, right?
Very good. Very good.
Now, what was important about The Creature from Jekyll Island? What do you remember about that?
It was making prices go higher.
Was it actually a creature?
No.
What was it?
It was a group of bankermen and politicians and lots of people who wanted money.
They
Greedy.
did want money. Yeah, Joey, I don't. How many times have your girls read those books?
Oh, at least a handful of times each one.
Yeah, I think it's fun that we get a chance to teach our kids as children, by the way, about how economics work. My wife was, I guess, just we know Facebook and Google and all this stuff is listening in on us. We've been talking about the Tuttle twins lately, and yesterday or the day before, we were riding down the road and she was talking about the 1-star reviews on the Tuttle twins, and they were actually promoting the 1-star reviews. And one of the comments were, let's just leave the economics up to the adults. And the response from the Tuttle twins was like, yeah, that's working so well. And then another one was like, kids don't need to know about economics. And the response was like, yeah, they'll never grow up and vote. Joey, I think it's the reason we're bringing this up, though. Our conversation today with Daniel Moore with Propelio, someone who has educated himself from a ground-up standpoint, was teaching us on how real estate works and also how we can apply that in our family's life. Give a little insight to our listeners about that conversation.
Yeah, Russ, I'm going to go ahead and tell you, Daniel's story is inspiring to me because he told us outside of the show, by the way, that he never even made it past 6th grade in the traditional school environment. And so everything that he's going to share with us today, he had to learn on his own. He basically educated himself about things that, be honest with you, I was blown away. His understanding of market cycles, his understanding of different real estate strategies. We didn't even get into all the real estate strategies that he was talking about, but man, that is inspiring that people can be at that level and not go through the traditional routes. But that's kind of what we talk about though, all the time, isn't it?
Well, I've been going through this History Channel documentary on the men who built America, right? And most of those men were self-made, right? They started from little to no means at all. J.D. Rockefeller, as an example, right? Andrew Carnegie, all of these people who really built what we know as America, and most of them were not book smart. They really just were innovators in their own right, and they were learners, and they were constantly challenging the status quo. And I felt like that was what our interview was about today with Daniel Moore from Propelio. Not that we didn't get a bunch of insight on market cycles and what we need to be doing. If you're a brand new investor or you're a seasoned investor, he gives insight in this interview as to how we should be pivoting given what's getting ready to happen. And he talked about, that we need to be positioning ourselves different than what we've been doing leading up to this moment. But I love just some of the insights he gave us as to what he thinks and looks at wealth differently now after a lot of success in the real estate world. But he said something, Joey, during our interview. He said that he didn't believe that real estate was necessarily the path. to wealth, or that real estate wasn't wealth. And I think that would maybe shock people as they listen to this interview.
Yeah, I think over and over again, you're going to get tactical to-dos. Like that's one thing. This wasn't just a bunch of fluff or conceptual ideas. You're going to get tactical. What can I do right now? What am I facing in terms of an economic slide as we're in the middle of maybe even a depression coming? So don't miss those. Don't miss his perspective on family and values. That was extremely inspiring. He's got 2 little girls, and you know me, I'm a little softy when it comes to girls because I have 5 of them. But man, so much to get out of this interview. And you're going to get access to his academy. Now, you've got a specific site, wealthwithoutwallstreet.com/Propelio, Propelio, Propelio. I'm glad I said it and not Russ. Let's jump in this interview with Daniel Moore. Welcome into the show. We have Daniel Moore joining us from Propelio. Man, thank you so much for being here.
I appreciate it, guys. I really am excited about doing this. I know we've been talking about this for way longer than we should have been, but I appreciate the persistence and the accepting of my current position for the past couple of months, man. Thank y'all both.
Yeah, Daniel, your backstory is really interesting, and I want to share it, if it's okay, with our listeners, because there's so many lessons that we all can learn from having success early on, but then going through some challenges and then using that to propel us. So let's take you back. We were talking pre-show, and you mentioned at, I believe it was age 21, that you did your first real estate transaction. Talk us through that time frame in your life and the events that happened from there until you were 26 or so. And I think there's a lot of just really good things that we can glean from that.
So like on my side, I never made it out of high school. I never got my diploma and everything. And I was working primarily in construction most of the time. And nobody really wants to do physical labor their entire life. While I personally enjoy physical labor, it doesn't pay very well. I'm making $9-10 an hour, and looking at the future of my life, I really started just reading a lot of books about real estate. And I was like, man, real estate is my way out of this. And I got the bug. I was probably about 19, 20 when I got that bug initially. And when I was 21, I bought my first flip. And coming through that, man, like when I bought it, I had maybe $50, $60 in my bank account. And by the time I turned around and sold it, I cashed like a $96,000, $97,000 check. It was just shy of $100,000. And I'm like, man, this is where I'm going, man. This is inspiring. This is exciting. And
that'll get your attention right there. I mean, it's a pretty wide swing.
I'd lived paycheck to paycheck my entire life. I'd been working since I was 13 years old. By the time I was 15, I had 3 full-time jobs. I was working around the clock. And by the time I was 19, 20, I still hadn't made it anywhere. When you're working 3 jobs and you're making $7-8 an hour on each one of them, and you're just still barely getting by in a lot of ways. So all that taken into consideration, that $100,000, I couldn't believe it. Like my bug was gotten, like that. I was all about real estate. Anybody that would listen, I'm sitting there like, man, y'all got to do real estate. I was so excited about it, man. I could not believe it. And I did really well afterwards. I didn't do what a lot of people normally do when they come into the first little chunk of money, which is, go out and kind of splurge. I didn't do anything for myself. Like I remember going out and buying 2 speakers, and the speakers were about $400 each. And I spent almost $1,000 on speakers, and I felt horrible for it. Like I didn't feel like I deserved it. I was sitting there looking at all that money in the account. I was like, man, you can't go out and waste all this. This is your chance to do something with your life. So I immediately went out there and I bought another house. I flipped it. I didn't do as well on that one, but I made like 20 or 30 grand. And then I went out and flipped some more. And by the time I hit deal number 5 or 6, I'd pushed up to about 250, almost 300,000 in accumulated growth over the course of a couple of years. And then I did all that through the course of 2007, 2008, completely being oblivious to the market around me. Like my understanding of a broader spectrum of effects when we're talking about the economy and other things that move in, I was oblivious. And I was moving through all of that, and I bought a flip right there in the middle towards the end of 2008, early 2009. And I lost a lot of money on that. Like I lost close to 60 grand on that house, somewhere in that price point. And then after losing that 60-ish grand, by the time I hit deal number 5 or so, I loosened my pocketbook up a little bit. And I bought a 12-acre ranch, 3,600 square foot house for me and my wife. and we're just sitting in there by ourselves, and my expenses went way up. So I was counting on all of this real estate revenue to come in, and I was now in a market cycle that I wasn't able to really perform in on the only thing that I knew, which is how to flip. So I started watching my bank account going the other direction. Every single month, I'm losing like 5, 6, 7, 8 grand from my reserves. And, I was like, man, I don't know what I'm doing. I did well, and now all of a sudden I'm scared. And I really started getting kind of trigger shy, because after losing that kind of money, I'm like, maybe I'm not as smart as I thought I was, at 20 something years old, making that kind of money. Can't no one say anything. That ego definitely took over, man. And I humbled myself, and I was like, man, I don't know what I'm doing. So I went back, started reading more books, and I picked up one that kind of led me down the path of apartment investing. And I'm like, this makes sense. It's like, all right, if I can do this with a $200,000 house, why can't I do it with a $2 million apartment complex, make more money and move forward? So I put an 87 unit apartment complex under contract at 26 years old. And I went through, sourced a KP, was able to go through due diligence, tied up a lot of money in my due diligence. And when I originally sourced my KP was, I'm saying KP, my key principal, basically the person that could back the loan, my credit partner, essentially.
Okay.
I secured somebody that was able to get the loan for me, because at 26, 27 years old, I wasn't getting a $2 million loan. But I found somebody that was willing to sign off on it for me. But when we sat down and originally discussed the plans, his wife was a little timid. Like you could tell that she wasn't really on board, but he was going for it. So he agreed to it. And the further and further I got through due diligence, and the closer and closer it became obvious that this transaction was going to close, the heavier she started putting the brakes on. Because can you blame her? I mean, like, I'm 26 years old. Here I was like, I just read a book. I'm going to buy an apartment complex. And like, you can understand why she would be timid. Like, I'm not blaming her by any means or saying that she shouldn't have. But I did have a lot of money tied up in my due diligence and my non-refundable earnest. So, I lost yet again another large chunk of change. And I'm like, you know what? I've got like 100 grand left, and this is kind of the last leg. I was up to about 250. Now I'm back down to about 100, which is what I started with. And I had a moment of clarity in my mind at some level. And I was like, this is what I'm going to do. I'm going to take every bit of the money I've got left. I'm going to pour it into education. I'm going to pour it into sourcing as much knowledge as I possibly can, because I was able to achieve what I achieved with no knowledge, just other than sourcing what I could source on my own. I'm going to invest every single bit of this as I possibly can back into education, and I'm going to go back out there and I'm going to crush it. And,
okay, hold on. Let me stop you there for a second. So when was it that it dawned on you that this was a market cycle issue and not a Daniel Moore's luck issue?
Oh, wow. That was 5 years ago. So like, I didn't realize, even with all of the money I put into the education, I never really got the concept of the cyclical market. I never really got the concept of, the 12 different primary acquisition and disposition strategies, how to apply them in a market cycle, where they best perform, and how to truly gauge the market. Like, what indicators should I be looking at in the market to tell me which strategy should I be really focusing on right now?
Okay, hold on. Let me throw in a question. So when you're saying different strategy, you're talking about whether it's wholesale or flips or subject to, like, is that what you're referencing when you say the different strategies that apply to different market cycles?
Absolutely. Because different strategies perform well in different cycles. So if anybody in here understands trading in the equity markets, like option stocks, option stocks, Forex, commodities, those types of things, you understand that there's different strategies that you can apply if the stocks are moving up or they're moving down or they're sitting flat. Like, you can do calendars, condors, puts, calls. You can do all kinds of stuff, and that's based upon what you think that stock's going to do. Well, it's the exact same thing in real estate. But one of the things that I like so much about real estate is it moves a lot slower. Like, your real estate markets don't typically move in big swings, month to month, day to day, hour by hour. Real estate normally moves in a decade or so cycle. So if we're looking at 10 to 15 year cycles, it's a lot easier to time, and you have a lot larger window to apply a strategy in to accumulate wealth. Yeah. So there's essentially 12 different ways to buy and sell real estate, and knowing which ones of those to apply in an upward, downward, or a flat cycle really will shift your performance.
So first of all, I'm going to give you a first time visitor buy on cussing on our show. Okay. Like you can't say words like stocks and bonds and Wall Street on the Wealth Without Wall Street show. You know that those are fighting words.
Those are black label. It just
Man, I don't want to put a target on my back, but I mean, I really see there being 4 paths to wealth, and I don't really consider, and this might get a little debatable, but I don't consider real estate to be a path to wealth. I consider real estate to be a storage of wealth. Real estate acquisition and disposition is nothing more than a trade, just like an electrician, plumber, or an HVAC tech. You know what? As an HVAC tech, you can make millions. As a plumber, you can make millions. As a real estate investor, you can make millions. But the way you make millions doing it is the application of business principles. So business principles, in my opinion, are the true path to wealth. Now, you can go out there and store your wealth in real estate, and you can create wealth with real estate. But the actual scaling and growth that are pushing it to true generational wealth comes from business principles. So my opinion is understanding finances is key number 1. You need to understand, to be able to look at a trailing 24-month financial statement and know what it means. You should be able to look at a professional financial statement and know what that means. So you need to understand finances. You need to understand business structure and management. And then you need to understand the core principles of a wealth building asset, such as you can make a ton of money, and excuse me for saying this, you can make a ton of money in commodities, options, bonds, not mutual funds, but your Forex, your commodities, your typical trades, options, your stocks, you can make a ton of money in that. And you can make a ton of money in real estate too. It's just a matter of which one do you want to apply your principles to.
Well, I'm glad that you break that out, because sometimes people get confused with wealth. Wealth is goods and services, right? Money is the medium of exchange to purchase goods and services. And we were talking about this early on, before we got started recording, that sometimes we also lose focus of why we're doing it. Why are we trying to create goods and services and to acquire more of that money so that we can buy those goods and services? You had a great response. What does financial success or freedom look like for you?
Man, that is a great question. My background left me in a mindset of proving to everyone in the world how great I could be. So it was, my initial movement into this was very self-centered. Like, how much can Daniel Moore make? How much money can Daniel Moore acquire? And as I progressed and I started seeing success and I started achieving a lot of my initial goals of, like, I want to be a millionaire, I want a really nice car, I want a really nice house. And as I started achieving all that, I honestly still felt extremely empty inside. I didn't feel successful at all, even though I had accumulated all these wonderful goods and everything. I found myself really in an honest, depressed state. I was extremely depressed. I wasn't proud of what I had achieved at all. And all I felt myself doing was wanting more things. And right around that time was about the time when I had my daughter. And through having my daughter and starting to really slow down and seeing what life was about, I started realizing there's far more to life than money can ever provide. And my goals really shifted to saying, you know what? Mental health is extremely important. Relationships with my friends and family, and most especially my kids, are extremely important. And you know what? My spiritual connections are extremely important. My physical health is extremely important. And finances are just one piece of all of that. So if everything else in my life is in the zero range, but my money is way up there, like, life was not worth living. So I really just started shifting my focus to the things that truly matter, which is more experiences with my friends and family. And life can be really fulfilling when your life is full of a lot of positive experiences and a lot of friends and family. I saw a TED Talk one time with a paramedic, and he spent a lot of his time with people in their dying days right there on the curb on the side of a highway. And he said he never once heard somebody ask for another ride in their Lambo. Every single person that he was sitting there with in their last moments were sitting there saying, I just want to see my kids one last time. I wish I would have went on that vacation with my wife. No one was sitting there talking about, man, I wish I could walk through my front door one more time at my mansion. And that really just shifted my mindset completely around. I got rid of all my toys. I started wearing the exact same charcoal colored shirt every single day because I had $30,000 worth of clothes in my closet. I'm like, this is ridiculous. I wear a pair of shorts and a t-shirt every single day. And it's like, I'm not here to impress anybody anymore. The only person I need to impress are my kids. And what I need to impress them with is core values that will allow them to succeed in this life and not just financially.
Well, so let's talk about some of that. I think this is valuable for your intellect on how to discern real estate assets and to come in and out of cyclical markets. And I want to dive into that. I think having you inside of our community and people being able to pick your brain and then them coming and checking you out and some of the things you're doing with Propelio software, Propelio Academy and teaching. There's a lot of that to be learned, but I think your understanding of this one issue that we're talking about today, and this is sort of a pivot from where I really thought our interview was going to go, but I think it's as valuable to know what we should do, how we should set our families at the forefront of everything that we do. So talk a little bit about that, because we don't really dive into how, as entrepreneurs, we spend enough time setting those core values with our family, and what are those things that we are doing that are helping us set that example we want. So give us some insight into Daniel's household, what that looks like with your two sweet little girls.
So I have two sweet little girls, and one of my biggest fears is them not understanding what a positive relationship should feel like. So the first and foremost thing is I must show a shining example to my children of what a good relationship looks like. So the core of the household starts with me and my wife. You know, we have a very open communication between my wife and I. We daily, you know, when the kids go to bed, we discuss like how were things with the kids today, what was going on, like what were some of the issues that they were experiencing, and we communicate very thoroughly every single day. And then when we are around the kids, and we don't, it's not like we are absent of problems, but we try not to hide them from our kids. We try to let our kids see us discuss them in a professional, respectful manner. It's like, okay, if my wife and I have an issue, we don't go in the other room and argue about it, because arguing really doesn't accomplish anything. So we try to set an example for our children of how to overcome conflict resolution. And you got to remember, my child's 3 years old, but my child at 3 years old can handle a very comfortable adult conversation. Like most people think my daughter's 5 or 6 years old. But my daughter would be like, you're harboring a scarcity mindset. I hope you understand that. And like, so I mean, like my daughter will tell you that. My daughter will flat out tell you that. I believe that one of the biggest things that I learned as a child was a scarcity mindset. And it's very difficult to amass wealth with a scarcity mindset, because you want to hoard, you want to keep, and abundance and growing abundance comes from giving. And you really must learn to give abundantly to receive abundantly. You can't have one without the other and sustain it for a long period of time. You know, even people that make massive amounts of money through a scarcity mindset will lose it eventually. So all of that taken into consideration, the core of the household is my wife and I, and making sure that our daughters see an example of a positive relationship and a healthy relationship. And then I move forward from there. Like we've already got, my daughter at 3 years old has the ability not to read, but she has the ability to read words. Like she can't read a book, but she can read words. But we've already got her reading children's versions of The Creature from Jekyll Island, Ayn Rand, The Economist from back in the day, having her reading Atlas Shrugged. So that way I can...
The Tuttle twins?
Yes, the Tuttle twins. So yes.
Yeah.
Oh,
so like,
love that.
So we sit down with them and we show them these types of philosophies, because my opinion is if I don't impose upon them a core value at this age, by the time they're 15 years old and I try and do it, they're not going to listen. So while they're still young enough and influential enough that I can kind of give them the core principles of wealth building thought processes that I won't have to when they're old enough to not care.
No, that's so
15,
good.
They're not going to pay attention. So at 3 years old, my daughter is extremely, they look at my wife and I as heroes. And while we are still heroes, I'm trying to give them, a lot of people look at a 3-year-old and they're like, you need to give them crayons and YouTube. And I'm like, no, that's not my opinion. And I'm not trying to downplay someone else's way to raise the children. But for me personally, I know that I've only got a small window to impress upon them 36 years of accumulated knowledge. And the faster I do that, the higher the probability of them accepting it will be.
Okay, I've listened to at least 5 podcasts. I'm now an expert in the infinite banking process. Maybe not, but yet I would love to talk to somebody about it. How can they do it, Joy?
It's as simple as going to freecall.wealthwithoutwallstreet.com. You can sign up for a short 15-minute call to see if this is a fit for you, and you can work with one of our coaches to financial freedom.
All right, so let's talk a little bit back into the area of expertise that most people are excited to hear about. And we are as we're recording this, we're hopefully close to the end of the COVID-19 crisis. And I do want your opinion as to what you think the real estate market's going to do. And if we were to prepare ourselves for success, what would be some tips or steps that you would give our listeners?
All right, I appreciate that. So I started speaking on this heavily around September of last year. Basically looking at what I could see from a data standpoint, I felt like we were due for a pivot from a seller's to a buyer's market. And I know a lot of people say that a lot. And this isn't something I've been saying since 2012. There's like people that say every single year, we're going to crash, we're going to crash, we're going to crash. And if you say it every single year, it's eventually going to happen. But I started becoming very public last year around September saying that I feel like we're moving towards a shift. I believe that there's going to be something that creates economic uncertainty. That economic uncertainty would move into the equity markets. We would see the Dow drop. We would see government intervention come in to try and support it. We would see money moving away, et cetera, et cetera. And we would start seeing the housing market stall, because the last time around, I saw what happened the last time around, and through studying that, I could kind of predict what would likely happen the second time around. A lot of that has happened. A lot of that has not happened. So like right now with all the economic stimulus coming in and everything else like that, and all of the issues going on, it would be hard to imagine that the Dow's still where it's at. But is the Dow where it's at because it's where it should be? Or is the Dow where it's at because it's being artificially inflated? And I really believe—
I'll take option B on that one.
Yeah,
Okay?
I believe that anybody that looks at this with anything other than rose-colored glasses would be able to admit that the economic stimulus package, the never-ending quantitative easing that's going on, and all the other manipulation from the Fed and the government is really what's holding it up there. So all of that to be said, we haven't seen the shift yet. But I believe within about the next 6 months, it's going to progressively start occurring. And I think we'll probably see the full turn of it within the next 12 to 18 months. So my anticipation is within the next 12 to 18 months, absent any significant federal intervention, that we're going to see the housing market turn the other direction. If you look at people like Robert Shiller, the Yale economist, the Case-Shiller Index, he was predicting a 26-year economic downturn. Like we're going to go through a deflationary period that'll likely last for close to 26 years was his prediction. Almost essentially the second recession, or the second Great Depression. The last one was kind of like a Great Depression skip. That's why they called it the Great Recession. Well, we kind of punted the ball down the court, and I don't really know if we're catching it on the other side of the end zone now or whatever. So there's a lot of uncertainty on my side. But because of my knowledge, because of my ability to perform in any market cycle, it doesn't concern me, and I don't want anyone else out there to be concerned either. The biggest thing that you need to understand is that the largest shift of wealth come during these largest transfers of wealth come during these shifts in an economy. And it generally goes from those that either were not prudent with their investing in an upward trending cycle, because an upward trending cycle is relatively easy to accumulate wealth in. We have more millionaires in the United States right now than we've ever had before. Well, a lot of that will shift away from those to those that understand how to perform in a downward trending market. I'm not nervous about that. And I'm also not nervous about telling everyone in the world how to perform in a downward trending market cycle, because it is of my belief through the upcoming stages that we will have the opportunity to help hundreds of thousands of people. We will have the opportunity to help hundreds and hundreds of thousands of people. And I personally can't help hundreds and hundreds of thousands of people across the board. So the more people that understand how to do this, will be able to participate in this and help. And that is what real estate investors do. Con artists rip people off. Real estate investors help people. We will have the opportunity to help more people over the upcoming 2 to 5 years than we've probably ever seen before. And if we do a really good job of helping people, we will bring wealth back to our families.
Okay,
And we must understand that principle.
Let me throw this in. Two different people you're talking to right now. One person is the full-time real estate investor. I want you to speak to that person in terms of strategy and what you would be doing right now if you're in the midst of this economic cycle change. What are you doing? And then the second person is that person that says, you know what? I'm tired of playing this rat race game. I'm not winning. I got to do something different. I see real estate as a way out, but I'm just that newbie. I don't want to make a huge mistake. So what would you do first in that case? So talk to both of those people right now based on this market cycle.
So if you're a full-time real estate investor, and let's just leave it at that, 10 plus deals a year, whatever it is that you're doing, where I would really want to be right now is moving to a position of liquidity, because liquidity is essentially going to assist anything that you have in this upcoming shift. Now, does that mean disposition of your current assets, maybe shifting some of your assets into liquidity? I would say that right now is better than never, but really right now, you really should have done that 6, 7, 8 months ago when I really started talking about this. I was like, hey, you really need to go through, do a portfolio analysis, stress test it, see what you want to dispose of, get rid of it right now while we're right here at the tail end of the peak. That's when you should have done it. A lot of people were trying to do it here in the last 2 weeks, but kind of missed that spot. But don't let that fret on you. If you can dispose and move to liquidity, dispose and move to liquidity. But there's a lot of people right now that are experiencing uncertainty in Wall Street, and they're moving their cash into liquid positions. If you have the ability to raise private capital, I'd focus a lot of my time right now on raising private capital and educating them on what the opportunities in this upcoming shift will be. I believe that personally, that if you are not familiar with creative financing structures and shorts, you need to get your knowledge up extensively on that side. If you don't know anything about subject to wraps, even I don't think lease options will be that important over the next 12 months, but shorts, subject to wraps, definitely where I'd put a lot of my concerns on my knowledge base at. You can get that for free at the academy. Go in there and educate yourself on that side, because I believe a lot of your opportunities coming up will lay within those 3 fields. I think the next 18 months to 3 to 4 years will lay high on those 3 strategies. So getting your private capital, understanding what those strategies are and how y'all can work together with them will be key to you performing. And then you just really upping your knowledge on the creative financing structures, and being able to do that is going to be key, I believe, in my opinion, over the next.
Okay. And that's awesome. You have resources to even help investors understand those key strategies.
Well, and I think that's good point to say is right now, I mean, you're sharing a lot of things, and we're going to point you toward those resources. And Daniel is referring to an academy that he has that teaches on all of these things. So Daniel, you hit a couple of my love languages when you talked about punting and touchdowns and stuff like end zones and stuff like that. You hit some of Joey's love language when you said the word wrap. He was thinking food immediately. But for those of you who are not as familiar with some of those terms, go to wealthwithoutwallstreet.com/Propelio. That's PROPELIO. And that was really
I have to help him along, Daniel. I have to help him with some of that. The spelling stuff.
But that's going to get you access to Daniel's academy and some of the other tools that he's referring to. So all right, so Daniel, that's good. So now take me to the person who is a newbie. They've not been an investor, but they know they've seen enough things in the past to realize wealth is built during downturns. And as you said before, real estate is just one means to that. What would you tell that new person listening to you right now?
Almost the same advice. It's I can't give them much of a different opinion. You've got the top of a market cycle, and you've got the bottom of a market cycle, and then you've got that period in between the two. Well, that period in between the two is different than the bottom. The bottom has a totally different strategy than the downturn. So with that taken into consideration, you still need to understand creative financing. You still need to understand subject to. You need to understand wraps, and you need to understand shorts. All of that information is still available in the academy. One of the biggest differences that you're going to struggle with, especially if you have limited to no capital, is the simple fact that you're going to be starting a little further behind than other people. But if you're serious about this and serious about transitioning your wealth, that shouldn't stop you. So you have wealth creation strategies that can be deployed absent a significant amount of capital. But you have three things that you need to do a deal. You need knowledge. Without it, you're not going to get a deal done. You need time, and you need money. You have to have all three of those things. A resourceful, persistent person does not have to have all three themselves. They just have to resource them. So you too need to learn how to raise private capital, but having limited experience, that might be a little more difficult for you. You might need to get 2, 3, 4, 5 deals under your belt absent the assistance of private capital, which means you're going to need a lot of knowledge and a lot of time and a lot of creative ways to create the capital.
Okay,
Now,
but let me stop you real quick. Let's say I'm the person that has no time. I've got some money and I can spend some time like educating myself. But beyond that, like the benefit I see of a full-time real estate investor is this is what they do. This is what they can spend 40, 50, 60 hours a week really focusing in finding deals and putting stuff together and the communication that goes along with that. What about the person that doesn't have that because they are, for the lack of a better term, they're stuck at their current job and they see this as a potential transition, but they can't get there currently. They don't have all the time a full-time person has. So what would you tell that person?
What I would tell that person is if you've got a lot of time, or excuse me,
no
a
time.
lot of money.
Yeah.
And a lot of money, there's some problems there. You're going to have to free up some time. I mean, because knowledge requires time. You're going to have to commit time to acquiring the knowledge. Otherwise, you're just gambling. And you don't want to gamble because what I'm going to tell you is you've got a lot of money and you've got knowledge, then you need to invest in other people's time, which means you need to go out and source a syndicator on the multifamily side, someone with a very proven track record, and you need to be very, very diligent in your due process on that because there's a lot of people that have the mindset of, I'll just raise as much capital as I can and buy everything. And if 10 deals work and 2 don't, who cares? 10 of them work, I'll let those investors lose their money. That is very serious. And that's why I say the knowledge is extremely important as well as your due diligence. But I've seen a lot of people get extremely wealthy passively by investing in other people that have the time, the knowledge, and need more money. So syndication on the multifamily side of it or anything on a larger scale like that, where you can drop $100 grand into it and 2 years later walk away with 400 grand and then reinvest that 400 grand and then 2 years later come out with $1 million. You know, those types of things are where you can move passively, retaining your full-time job and everything else. But you're going to probably need to spend a considerable amount of time upping your knowledge. Otherwise, you're putting blind faith into someone else, and that is doing nothing more than gambling. You really need to understand who you're investing into and what their track records are. And you need to understand that platforms can be purchased. Just because they're on the stage screaming from the top of their lungs how great they are, you can buy that stage for $5 grand. You know, you can go out there and you can buy a magazine cover for $2,000. You can go out there and hop on a podcast just like I'm on right now and really sound knowledgeable, but that does not mean that you earned that spot. You just paid for it. And I want to make sure it's very clear for people to understand that because there are a lot of con artists in the industry that have absolutely no desire other than to line their own pockets. So you need the knowledge, otherwise you're gambling.
All right. So what knowledge would you tell, where do I go get this knowledge? What would be some books that you would recommend or videos or what sort of information do I need to have so that I attain that knowledge you speak of?
That knowledge that I speak of has been historically an extremely guarded asset because it is one of the paths to wealth. And the scarcity mindset in the world is essentially let's hoard the wealth. So you're not really given access to that knowledge freely. It comes at an extreme price point. You essentially have to have enough money up front to gain access to the knowledge to make the money. So that normally comes at a $20,000 to $50,000 price point to gain that knowledge. One of the things that we have done with Propelio is did everything we could to take that exact same knowledge and release it to the world for free. So you must be dedicated enough to go in there and watch it. And while you're going to go in there and watch it, it will leave you with a very solid foundation. You're still going to be left with some questions and stuff like that. But then that's where you bring the mentor in. And you need a mentor at some level to leapfrog you forward. You can definitely do it yourself with just the knowledge from the Propelio Academy. But if you come out the other side of the Propelio Academy and you're like, I'm a little bit uncertain as to what's going on, apply some of your principles, drain the capital, then bring yourself a mentor in. I'm saying all that because, like, I'm not going to say that there's a book out there you're going to be able to go and read and then be able to accurately underwrite an apartment acquisition. You're not going to understand the bridge financing. You're not going to understand the waterfalls. You're not going to understand the syndication. I've not seen a book out there that gives you that strong of an education that you can actually go out there and implement. Most of the books are theory, and most of the books are hype to get you into a program that sells you $50,000 education. If you know of a book that's different, I'd be glad for y'all to present it, but I haven't personally seen one that gives you much more other than the philosophy behind the capital producing strategies, not so much the nuts and bolts of how to do it.
Man, that's good. So if I go into the Propelio Academy, explain to me the type of things that I should expect to see, so that when I go in there navigating it, I'm getting the best from it.
Okay. So like right now, we've got an 18-hour course on subject to and wrap financing, which is the premier of what we're moving into right now. So if you have zero experience in even what those terms are, like what's the difference between a wrap and a subject to? What's the difference between owner finance subject to and wraps? What's the difference between a lease option contract for deed and owner finance? Like what is all of that? Well, that video series will tell you not only what all of those terminologies are, but how to market to acquire it, how to negotiate to purchase it, how to close on it, how to insure it, how to negotiate it, how to underwrite it, how to dispose of it, how to finance it, how to maintain it, all of those things.
That's so awesome. Well, man, Daniel, thank you for sharing. I mean, there were so many little paths that we went down here, and I hope as you're listening to this, you can see Daniel's passion for real estate. He definitely has a good grasp on economics as a whole, and he applies that in his teaching. And I encourage you to go to wealthwithoutwallstreet.com/Propelio and take him up on that offer to dig in there, because if you're going to be in real estate, you need to understand what you're really doing. And when you're listening to people who actually are doing it and you can see it, then you can go practice it and come back and rinse and repeat that process over and over. You're going to set yourself up for more of success than not. And as Daniel said, I believe Joey and I agree 100%. We're about to go into some treacherous times. I mean, this little calm is the calm before the storm in our eyes as well. And at some point, our taxpayer money is going to run out, and somebody's got to pay for it, and it's going to happen. So thank you, Daniel, for your time. We really appreciate you, and wish you the best in the next few ventures that you got going.
I appreciate it, man. I truly do. And I appreciate y'all for allowing me to come on here and run my mouth.
Now, everybody enjoys somebody else getting a chance. Joey and I do a good job of that ourselves. So have a great day. Thank you, as always, as our listener. We hope that you gain value from today and you'll share it with somebody else. And definitely go check out wealthwithoutwallstreet.com/Propelio. Have a great day.
I love it when we get to hear what people would be doing if they got to financial freedom. The last one that I got to read, somebody said, I would be driving and picking up my kid every day from school. That motivates me.
That is why you need to be a part of the community that is seeking financial freedom. Go to community.wealthwithoutwallstreet.com. You can join for free today.
This has been the Wealth Without Wall Street podcast. Don't forget to subscribe to the show to break free of the Wall Street mindset and begin building wealth on your own terms in places you understand, so that your wealth will never run dry. See you next